Okay, so let me explain how I took this trade on Euro USD on the 15 minutes time frame. You can see currently we are running on it. This is a 1 is to 6 risk to reward. So let me show you how I took this trade. This is a breaker block entry as I've been teaching. Now, if you observe, this was our failed word order block having this break of structure. But let me show you how or what we first of all take note of before analyzing the market. So going to a clean chart, this is what I usually look for. First of all, what's the structure? This is our breaker block. First of all, an order block because it failed, it then became a breaker block. So it broke this low right now as a normal order block is meant to, so that it can continue all the way downwards. But all of a sudden, price then broke through it. It now becomes what a breaker block, not no longer an order block because price broke through it. And now what next? We need our liquidity, and liquidity would be right here. Thus, this liquidity, or also known as inducement, is safeguarding this order block, or right now a breaker block, from hitting a loss or from being taken out to the downward side. So we are expecting this liquidity now to protect it. And now for us to confirm that our liquidity will protect this zone is for price to buy and create what is a second break of structure. So as it is now a second break of structure, we expect what next do we expect? We expect price to come to tap into this zone just like this and then buy. Now this was a sell structure at first. It was a sell structure. You can see price came down, took out this low. It was meant to come, form liquidity, take out the second low, creating a second break of structure. That's for an order block. Then tap into the zone and then sell. But all of a sudden now price broke through it. Now at that point you're meant to hold and be like, okay, what's the market doing right now? Is it going to continue to the upside, or is it still continuing to sell? So price broke through it now, creating liquidity. This zone now is no longer, is still valid, but it's no longer an order block, it's now a breaker block. So price will then do a tap in and then take out this next high. So we've gotten our structure right now. Let's mark out the other things, which is our break of structure. Now we have our first break of structure right here on the downside. This is our first break of structure. But first thing first, you always mark out your order block, or as we know now, our breaker block before the break of structure. Now after we have the break of structure, what do we need? Liquidity. We have it right here. This zone now is our liquidity. What next? We need our second break of structure, which is our confirmation that yes, the market has changed trend from selling to buying. This is for a buy structure. They also have for sell structure. It's just the opposite. It's just like turning this now upside down. So we have what the second break of structure confirming that yes, price has changed. And what do we expect? We expect price to do what? Come tap into our breaker block and then target this next high. So this is the total structure of a buy breaker block. Now let's go into the live chart to check this out. You can see it right here. We have our order block right here. You can also see that we have our break of structure right here, just as we have in the picture, or in the structure diagram. Now what else do we need? Liquidity. We need liquidity. This is our liquidity. And what else? Second break of structure, right? This is our second break of structure to tell that yes, the market is now on an uptrend. So and you can see how the market went upwards, trying to buy, but because it hasn't yet triggered this our zone, so we are expecting price to come down to that zone. But now your breaker block won't be a valid one if you don't have a fair value gap. Now let's zoom into here and observe. You can see how clean this fair value gap is. From this week to this week, you can see the gap. It's a very massive gap. Like it's very okay. It's fair enough to be a fair value gap. That is why it's called fair value gap. It has value. Price needs to come to tap into that zone. Now, if you're to scroll all the way, you can see price came to tap into this zone. That's what caused the first buy. I have a breaker block, which is this zone right here, but I missed this trade because I wasn't quick enough to observe it. But anyways, we still took another trade and a good one. So from this week now to this zone right here, our breaker block, you can still see there's still a gap. Price hasn't yet mitigated our zone, which is the gap is just left with this, and it's still a good gap to be a fair value gap. So that's how we it came to that. Then after that, what are we expecting? Expecting price to do what? Tap into our zone and then take out this next high right there. So that is how simple it is. It works exactly that way, just the way the diagram is. What do you need? You need what?